And it looks like we have a quorum. So I'd like to begin in the interest of using our time expeditiously and wisely. Once again, I'd like to welcome you to Good Standing, Keeping Up with California's Nonprofit Reporting Requirements. And just a little bit of housekeeping here. I know that we're all very comfortable in this new Zoom world that we inhabit, but I think it's a good idea just to dust up on some of these technical aspects. Everyone seems to be using the chat feature very well. Really happy to see everyone contributing their names and their locations. There is also a Q&A box, and this is the button down at the bottom of your screen that says Q&A. This is the place where you can submit questions for our presenter. Erin will be covering lots of ground today, so she may not be able to answer the questions as she is presenting. I'll do my best to monitor those questions, and we do have a little bit of time set aside at the end. We have a jam-packed agenda, so if we do have time to answer those questions, we will do so. In the instance that we are unable to answer those questions, what I like to do usually is collate those questions. And if there are folks that are asking many of the similar questions, we'll provide a document in our follow-up email to everyone. And this is also a good time to remind everyone that all registrants of this webinar will be receiving a copy of the webinar itself, a recording, and then a copy of the PowerPoint slides and resources that Erin is going to run through. There's also a closed captioning feature. That is the CC button at the bottom of your screen. So if you'd like to follow along via text, please enable that feature to do so. Great. Just a little bit about CalNonprofits for those of you that are not familiar with our organization. The California Association of Nonprofits is celebrating its 40th year in existence, and we act as the voice of nonprofits for the state of California. We are a membership organization that engages across the policy, education, and data and research landscape. We are also involved in advocating for nonprofits at the state level, bringing legislation, and also at this moment in time, standing up for the nonprofit community in ways that support our organizations and our community here in California and nationally. I'd also like to do a quick plug for membership. Like I mentioned before, this webinar is free to everyone because of a grant from the Inland Empire Community Collaborative. Often our webinars charge a fee. If you are joining as a member, you will never have to pay a fee for any of our educational events. So we do have a 15% discount code, Join Now 15. I'll be sending this information in the follow-up email as well, but I would really encourage you to join CalNonprofits and explore the many benefits of membership on our membership page. I'll include all of this relevant information in the follow-up email for you to peruse as well. And finally, I'd like to bring on Erin Bradrick, the principal at Neo Law Group. Erin, like I mentioned, is a longtime partner of CalNonprofits. She's done this webinar in the past, so we're so excited to welcome her back again, and we're really pleased to have you here, Erin. So thanks so much for joining us.
Thanks, Robert. Thanks to CalNonprofits for having me come back. I have to say I'm a bit shocked that the idea of listening to a lawyer talk about compliance for an hour was appealing to this many people, but it is great to have you all here. So I just want to start by acknowledging that compliance includes a lot of things, right? It is a big term. For purposes of this 1 hour webinar today, we're going to be focusing on a pretty narrow subsection of compliance. And Robert, if you wouldn't mind going on to the next slide, that would be great. So our conversation today is going to focus on the core filings that are due to the IRS, the Franchise Tax Board, the California Attorney General, and the California Secretary of State's office. The filings I'm going to be talking about today generally apply to California nonprofit public benefit corporations that are recognized as exempt at the federal tax level under Section 501c3 of the Internal Revenue Code, right? So I'm talking about California nonprofit public benefit corporations that are 501c3s. Now, some of these filings are also going to apply to organizations that are exempt under another section of 501c. Some are also going to apply to other types of California nonprofit corporations. Some are going to apply to organizations that are incorporated in another state but are exempt under Section 501c3. But just wanted to flag at the outset that I'm going to be primarily talking about California nonprofits that are C3s. Now, of course, what I'm going to discuss today is not an exhaustive list of all the required filings that these organizations need to submit on a regular basis. There likely are additional filings that nonprofits need to submit, particularly depending on their org structure, employee structure, programmatic activities, states of operation, and other factors. And of course, there's additional compliance obligations and considerations beyond just the required filings with these agencies we're going to be discussing. I would encourage you to review the support that your organization is currently receiving around compliance, both in terms of internal capacity and from external advisors, and try to identify any gaps in that support and kind of really focus in on that. Now, I also just want to acknowledge that for our conversation today, I'm not going to be diving into the recent developments coming out of the current presidential administration. There are definitely other great conversations out there happening around what nonprofits need to think through in light of our current environment, including at CalNonprofits. But for our conversation today, I'm going to be talking kind of more basic compliance filing obligations with these 4 agencies. I will note at the outset, though, that it feels like a particularly important time for many nonprofits right now to ensure they've really tended to their basic compliance obligations, that you're not leaving any kind of loose strings out there that you could easily be tending to and ensuring the organization is kind of up to date on these obligations we're going to talk through. So maybe that is why so many people are particularly interested in this conversation at this time. And hopefully our conversation today will help you all. So we're going to start on the next slide here by looking at your filing obligations with the Federal Internal Revenue Service, right? So any organization that's recognized as exempt under Section 501c3 with the IRS is going to have to file an annual return. On the next slide, Robert, if you don't mind. So other than churches or certain affiliated organizations with churches, and a few other exceptions, most 501c3s are generally going to need to file an annual return to the IRS every single year using the Form 990 series. There's several forms in this series that you see listed on this slide. The first, Form 990, is just the basic long form that any organization other than a private foundation can file. But some organizations are potentially going to be eligible to use a shorter form version of the return. The kind of mid-size shorter form version is called the 990 EZ, and it's available for organizations that have gross receipts in the filing year of less than $200,000. Gross receipts refers to the total amounts the organization receives from all sources during the annual accounting period, without subtracting any costs or expenses. And not only does the organization have to have gross receipts of less than $200,000, it also has to have total assets at the end of the year of less than $500,000. If an organization meets those threshold requirements, it can file the streamlined Form 990 EZ. It's a bit of a simpler return than the long Form 990, a little bit easier to fill out. But there are a few exceptions that are important to flag, including if an organization is sponsoring donor-advised funds. It then is required to file the full Form 990, regardless of the size of its receipts or total assets. Now, for even smaller organizations, there's an even more streamlined annual return that can be filed with the IRS called the Form 990N. It's very simple. It's essentially a postcard, although it's filed electronically these days rather than an actual physical postcard. And this is for organizations that have gross receipts that are normally $50,000 or less, averaged over the last 3 years, right? So for very small 501c3 public charities, they have the option of submitting this very simple return. Now, the final form in the Form 990 series is the 990 PF. So when an organization is recognized as exempt under Section 501c3, it's generally considered to be a private foundation by default, unless the organization can satisfy one of the other grounds that allow it to qualify as a public charity. Private foundations are generally subject to more restrictive rules and requirements, so generally qualifying as a public charity is going to be preferable for most organizations. But for 501c3s that are classified as private foundations, they have to file the Form 990 PF, regardless of the size of their receipts or assets. Right? A separate form that requires reporting on compliance with specific rules applicable to private foundations. You can find all of these forms on the IRS website that's linked to at the bottom of this slide here. You can also search by form number or keyword, and there's a specific IRS page for the forms and instructions specific to exempt organizations. I just want to flag here that there may also be a number of other forms that an organization has to file with the IRS, depending on the organization's activities, including other forms specific to exempt organizations, right? So for example, if your organization has unrelated business income, you may need to file Form 990T with the IRS in addition to your basic Form 990. There's also a number of schedules to the Form 990. I didn't include this on the slides. There's a large number of them, but I do want to just note a few that may apply to a number of organizations. The first is Schedule A to the Form 990. This is where an organization reports whether it's classified as a private foundation or if it meets one of the requirements to be classified as a public charity, as I briefly mentioned earlier. Now, if an organization qualifies as a public charity, this is where it reports to the IRS on what basis it qualifies as a public charity. For many organizations, it's on the basis of meeting one of two public support tests, and all of that information gets reported on Schedule A. So important schedule to be aware of that you'll all be filing along with your 990 every year. Schedule B is also worth mentioning. This is where you're going to report certain large donations that come into the organization during the reporting year. It's generally a report of donors who gave $5,000 or more during the reporting year in any form, cash or assets. For public charities, 501c3 public charities, the names and addresses of donors don't need to be made available to the public for inspection. So the Form 990 itself, including schedules, is generally a publicly available form that needs to be provided by the organization on request. But there is an exception for identifying information of donors on Schedule B. So you still submit that information to the IRS, but you don't need to include it in the public copy of your 990 that you make publicly available. Really important to make sure that you're preparing a separate copy of your filed 990 for public disclosure purposes, and that you've taken out the specific information from Schedule B that doesn't need to be made publicly available. And then a final schedule that I'll just note for purposes of this conversation, Schedule C to the 990, is around political campaign and lobbying activities for public charities. This is my favorite schedule, which I realize by acknowledging that I am outing myself as a major nerd. But assuming you're a 501c3, when you're filling out Schedule C, you should not have any partisan political activities to report, right? Hopefully everybody on this call is fully comfortable with that prohibition for 501c3s around partisan political activity. But you may have lobbying activities to report. And for most 501c3 public charities, they can engage in some lobbying activities. And there's also an election that I will just do a quick plug for called the 501h election that can be made by many public charities by filing Form 5768. If you're planning to engage in any lobbying activities, or you already are, and you haven't made that 501h election, I would encourage you to look into it further and see if it makes sense for the particular organization. So one just general note on the Form 990, it is a publicly available document, as I mentioned. So I would encourage you to think about it not only as a required report on the organization's financials, transactions, and activities that you're submitting to the IRS, but also as a bit of a public communications piece. Right? And in light of current circumstances in particular, I'd recommend being very intentional about the information you're including on your 990, particularly sensitive information. You want to make sure you're not including any social security numbers. Be careful that you're not disclosing home addresses on the 990 for individuals affiliated with the organization in many situations. And for some organizations, it might also mean thinking very carefully about how you describe the organization's mission and programs in our current world. The 990 is required to be filed electronically, meaning that all the information is submitted in a machine readable format to the IRS, right? And again, all made publicly available. The IRS, we know, has moved to data-driven audit practices in recent years, meaning that they've established a number of algorithms that aren't shared publicly that they use to search for keywords and key information on these machine-readable Form 990s that get filed with the IRS every year. We know that those algorithms then generate red flags based on certain information, and that certain 990s then get elevated for additional review. That then informs how the IRS decides which organizations to conduct audits on. Right, so I would really encourage intentional focus on your 990s, really thinking about every piece of information you're putting in there, making sure it's truly accurate, it's been clearly vetted and thought through, and that it's something you're comfortable sharing publicly. So on the next slide, we'll talk about what happens in terms of actually filing your 990. The due date for the Form 990 is generally 4 months and 15 days after the end of the organization's fiscal year. So if your organization's on a calendar year, that means your 990 is generally going to be due by May 15th. If you're on a June 30 year end, it's going to be due by November 15th. But what happens if you don't file on time by the deadline? Well, there is a form that you can file to request a 6-month extension on the filing for the 990. That's Form 8868. But if you do not request an extension, or you're late on the original filing date, or you request an extension and you're late after the extension due date, then you can have penalties imposed if you don't have reasonable cause for the late filing. Penalties of $20 a day up to $12,000, or 5% of gross annual receipts, whichever is lower, for organizations that are under 1.2 million in total receipts. And then for organizations that are larger, that have gross receipts of over 1.2, those penalties can be $120 a day up to a maximum of $60,000. So fairly significant penalties that can be imposed for late filings on the 990. Wanting to make sure you have processes in place to get these filed on time each year is going to be important. Another key thing to note here is that if an organization fails to file its return for 3 consecutive years with the IRS, it will automatically have its tax-exempt status revoked. This revocation is automatic on the due date of the 3rd annual return that has been missed, right? And it can't be undone manually. It is an automatic revocation. Once an organization has been automatically revoked by the IRS, the process for being reinstated as an exempt organization often, not always, but often involves submitting a new exemption application to the IRS, a new Form 1023. And I'll just flag that we are seeing processing times for exemption applications at the IRS right now often take anywhere from 8 to 10, 11 months to get processed. So if you have to reapply for exemption and wait for the exemption application to be processed, we're looking at quite a delay. So really important to make sure you have these procedures in place to make sure you're hitting all of these deadlines for these compliance obligations we're talking through today. Of course, we're not quite sure how that timeline and the review process at the IRS might be modified in coming months, particularly with staff cuts at federal agencies. Could be that we see even longer delays. Okay, so now that we've talked about the next slide, Robert, if you don't mind. Now that we've talked about the basic filing obligations with the IRS related to federal tax exemption, income tax exemption, we're going to switch over to the California Franchise Tax Board. So at the state level, an organization can also apply to obtain exemption from state franchise taxes. And that process flows through the California Franchise Tax Board. Just like with the IRS, there is an annual return that is due to the Franchise Tax Board by exempt organizations called the Form 199, excuse me. The Form 199 is the general return, much like the Form 990, that is required for all private foundations, regardless of gross receipts, and can be filed by all public charities if they choose to. But there is also a more streamlined form that's available for certain organizations to file called the Form 199N. So these This form is available for organizations with gross receipts that normally are equal to or less than 50,000, also averaged over the last 3 years, the most recent 3 years. So again, this is going to be like the 990N for very small organizations, and it's a very streamlined return that can be filed with the Franchise Tax Board. At the state level, there's no equivalent to the 990EZ for mid-size organizations like there is at the federal level. And just like with the Form 990, there may be additional forms that need to be filed with the Franchise Tax Board along with your annual return. So for example, Form 3509 is used to report political or lobbying activities. FTB Form 109 is used for unrelated business income. On the next slide. So conveniently, the timing for filing your Form 199 with the Franchise Tax Board aligns with the filing deadline for the 990 with the IRS. So this form is also due by 4 months and 15 days after your accounting period ends as an organization. The Franchise Tax Board does provide a 6-month extension automatically without an organization needing to submit a written request, but only for organizations that are in good standing with the Franchise Tax Board as of the date that their 199 form is due. And at the end of this presentation, we're going to run through how you can actually look up your organization's standing with each of these agencies we're talking about. There's also a form that you have to file if you owe tax, any type of tax in the year, and you want the extension. It's called Form 3539. So just a heads up that there is an automatic extension, but in certain cases, you do need to file something and you need to be in good standing in order to take advantage of that extension. Now, the Franchise Tax Board, if you fail to file on time, can also impose penalties. They're a little bit less than those that can be imposed by the IRS. It's a penalty of $5 a month, so a little bit more manageable, but it's imposed from the original due date, even if you got an extension. Those penalties max out at $40, so not quite as significant as at the federal level, but still important to make sure you're staying on top of timely filing returns with the Franchise Tax Board. Now, just like at the federal level, if an organization fails to file its returns with the Franchise Tax Board for 3 consecutive years, it will similarly be automatically revoked from state franchise tax exemption on the due date of that 3rd annual return. So also really important to make sure that you're getting these filings in on an annual basis. One quick note on an organization's status with the Franchise Tax Board, and I will highlight this again at the end of the session when we kind of look through how to look your organization's status up with these agencies. But for a 501c3 in California, there's actually 2 different statuses to worry about with the Franchise Tax Board. There's entity status and exempt status. Exempt status has to do with whether the organization is recognized as exempt from state franchise taxes. So you could have a California nonprofit that's exempt under Section 501c3 at the federal level, but perhaps never filed a 3500 or a Form 3500A with the Franchise Tax Board to become exempt from state franchise taxes. Or it could have filed its 990s with the IRS every year and still be exempt, but maybe missed its 199s filing with the Franchise Tax Board and have been auto-revoked. So you could have an organization that's in good standing with the other entities and is in good standing with the Franchise Tax Board, but is not exempt from state franchise taxes. That second status with the Franchise Tax Board is entity status. And this has to do with whether the organization is actually in good standing with the Franchise Tax Board. An organization can either be active or suspended with the FTB. If an organization is suspended, it might be because it failed to file a return that was due, or because it failed to pay a fine or other amount that was due to the Franchise Tax Board, including a penalty that was imposed by the Secretary of State's office for late filing, because those penalties are collected by the Franchise Tax Board. Now, if an organization is suspended with the Franchise Tax Board, it can't legally do business in California. It can't use or sue or defend the organization in court. It can't protect its right to use its name, meaning another organization could form using the exact same name as the organization. And its tax exempt status at the state level will be revoked as of the suspension date. So really important to make sure you're getting communications from the Franchise Tax Board, paying any penalties that are due on time, and making sure you're getting those annual filings in, keep the organization in active status with the FTB. If an organization does end up suspended with the FTB for 4 consecutive years, it could also be administratively dissolved under procedures that were put in place a few years ago. So again, important to stay on top of these compliance obligations. Okay, so moving on to our next agency, the Attorney General's Registry of Charities. Robert, if you don't mind advancing to the next slide. So it changed its name, used to be called the Registry of Charitable Trusts, and is now called the Registry of Charities and Fundraisers as of the beginning of 2024. So the California Attorney General is responsible for overseeing the solicitation and use of charitable assets in California. That's by California nonprofits, as well as fundraisers that are soliciting or holding or assisting nonprofits with soliciting charitable funds in California, and organizations formed in other states that are also soliciting from California donors or otherwise holding charitable assets in California. The AG's office in California is primarily focused with nonprofit governance, with proper use and oversight of charitable funds, and with protecting donors in the state of California that are giving to charities. When an organization initially forms, so California Nonprofit Public Benefit Corporation, they need to file what's called the Form CT1 with the Attorney General's Registry. That's the initial registration. It also needs to be filed by entities out of California or California, other types of California entities that are holding or soliciting charitable assets in the state. There are a few exceptions for religious organizations, hospitals, and educational institutions that aren't subject to this registration requirement. The initial Form CT1 is due within 30 days of when the organization first receives charitable assets in the state of California. And that initial registration has to attach the bylaws and articles of the organization. I mention that in particular because, as you'll see when we do the kind of look through of the agency websites at the end, they post PDF copies of all these initial filings that are submitted to the AG's registry, meaning that you can go onto the AG's site and you can pull records for some of these organizations that have been uploaded at the time the initial CT1 was filed. So it can be a really good resource for obtaining information from other organizations as well. The Form CT1 also needs to attach a copy of the organization's exemption application filed with the IRS and a copy of the IRS determination letter if the organization already has those at the time it submits the Form CT1. Now, if you don't yet have an exemption application that's been submitted or a determination letter, then the AG will send a letter asking you to provide those when they're available in order to complete the initial filing. On the next slide, but of course, there's not just an initial filing with the AG's registry. There's an ongoing filing obligation that needs to be submitted by any organization that is subject to the registration requirement with the AG registry. This is called the Form RRF1. It's due annually, also conveniently lines up with the deadline for the Form 990 and the Form 199 that we just were discussing. So it's due 4 months and 15 days after the end of the fiscal year of the organization. Now, this Form RRF1 has to attach a copy of the Form 990, 990EZ, or 990PF that you submitted to the IRS for that respective reporting year. This is something that a lot of organizations miss, and if you do not attach a copy of your federal return, the reporting to the AG will not be considered complete, and you will potentially be subject to delinquent status, right? So we'll talk about that in just one second. You also have to, one note on that. I mentioned earlier to make sure you have a public disclosure copy of the Schedule B to the Form 990. So make sure when you're attaching a copy, in terms of submitting your RF1 to the AG, that you're attaching the correct public disclosure copy of your 990 along with that. Not disclosing information publicly that you're not obligated to. You do also need to submit the appropriate filing fee with the Form RF1, which is calculated based on the total revenue of the organization during the reporting year And if you fail to submit that fee along with the RF1, your filing will also be considered incomplete. One side note that the Form RF1 was pretty significantly updated a couple of years ago in 2022, including with a new fee schedule. We're not seeing this happen as much anymore as we get a little further away from 2022. But if you have a past due Form RF1, let's say you missed, during COVID, you missed filing your RF1 for 2020, and you realize you have an incomplete record for that year and you need to go back and submit it. If you use the old Form RF1 or the old fee structure, it will be rejected. So just a note here to make sure you're using the current Form RF1 for all filings, regardless of the past year for which the registration form is being filed. For many organizations, you can now actually complete the Form RF1 online through the online renewal system, which is helpful for many organizations that are eligible. You do need to create a user ID before you'll be able to access the online filing form. The user IDs, I believe, are still being sent automatically by postcard to the mailing address that the AG has on file for the organization, usually within 45 days after the end of the latest accounting period. It's another situation where you're going to want to make sure the address the AG has in file is accurate, that you can receive mail that's being sent to the organization at that address, and look out for a postcard with a user ID if you haven't yet set up an online filing system. One more just thing to flag on the Form RF1. There is one question on there about whether the organization works with any professional fundraisers falling within the definitions under the California rules. The Attorney General lately has been using Form RF1 responses by charities on that question to look and see whether the listed professional fundraisers are in fact properly registered with the AG. As I mentioned at the outset, the AG also has oversight responsibility for professional fundraisers for charitable purposes in the state of California. And we are seeing the AG kind of follow up on non-compliance with professional fundraisers based on responses that charities are submitting in their Form RF1. So just important here to flag that you understand those professional fundraiser rules, that if you're working with a professional fundraiser or anyone advising you on your fundraising activities in the state of California, that you're aware of the requirements that apply and that the professional fundraiser is properly registered if they're required to be. And then finally, if you are an organization that's rather small, that was eligible to file that 990N postcard with the IRS, that postcard doesn't contain any financial reporting information. It's very, very simple, like I mentioned earlier. Excuse me. So if you're an organization that filed the 990N in a tax year with the IRS, then the AG wants some additional financial reporting. So in addition to your in addition to your RRF1, too many letters and numbers in the names of these forms, you also need to file what's called the form CTTR1. It's essentially a treasurer's report, a financial report for the organization that files some basic financial information, simple balance sheet and a statement of revenues and expenses. So just a heads up here that if you filed that 990N, instead of attaching a copy of the 990N filing to your RF1, you are going to need to complete the separate CTTR1 in order for your filing to be complete with the AG. Okay, on the next slide. So in terms of when this RF1 gets filed, if you timely request an automatic 6-month extension for filing the Form 990 with the IRS that I mentioned when we were talking about the 990 filing, then you also automatically get an extension for the Form RRF1. It makes sense since you have to attach a copy of your 990 to the RRF1. You can't submit the RRF1 until you've submitted the 990. If you get that 6-month extension from the IRS, you don't need to send anything to the AG at the time you get the extension. But when you submit your RF1 before the end of that 6-month extension, then you also need to make sure you not only attach a copy of the 990 that was filed, but that you also attach a copy of the submitted extension request to the IRS with your RF1. So make sure if you get that extension that you're complying with that additional attachment requirement. If you are delinquent with the AG, if you're late in filing your RF1, then fees of $25 a month can be imposed. And a key thing to note here is that charitable assets can't be used to pay these late fees. So they do need to come from other sources rather than organizational funds. And one of the questions on the form RF1 that you submit to the AG every year is whether any organizational assets were used to pay any late fees or penalties during the reported year. Now, if an organization is flagged as delinquent with the AG, then it cannot technically operate or solicit donations in California, right? Pretty significant impact. There's also relatively new fundraising platform regulations that went into effect last year that require certain charitable fundraising platforms. So these are online websites that receive donations that are recommended to go to a number of different charities. I'm sure many of you are familiar with a number of these fundraising platforms that are out there. And these new regulations that apply to those fundraising platforms require them to remove any organization from their platform if it's not in good standing with the Attorney General's registry. So if you fail to file your RF1 on time and the AG flags you as delinquent, it may be that you're not only subject to the impact of delinquency that I just mentioned from an operational standpoint, but that your organization also gets dropped from various fundraising platforms. We're seeing that cause a number of headaches for organizations that rely on donations that come through fundraising platforms online. We're also seeing government contracts that aren't getting renewed with organizations that are delinquent with the AG's office. So really important to make sure you're on top of this. I will just note that there are a large number of organizations that are currently delinquent with the AG. I've heard recent statistics of around 30% of organizations that are subject to the registration requirement that aren't current in their filings. And as a result of the large number of delinquent organizations, we are seeing the AG's office really crack down of late. We're seeing them update the registry more frequently, more vigorously than in past years, but still some uneven enforcement. So we just strongly encourage you to take a look at your status with the AG, and if there's any issues, try to correct them as soon as possible. The other thing to note is, like many agencies, the AG's office is relatively backlogged right now. What that means is that once an organization submits the documents that are required for it to come into good standing with the AG's registry, we're still seeing it take a number of months for the AG's office to get to those filings, process them, and actually update the organization's status. Right? So if you fall into delinquent status, even if you catch it pretty quickly and you submit your missing filings or you correct any filings that weren't complete, we're still seeing it take often 6 months for an organization's status to actually be updated online. And in that interim period, there can be significant implications, both in terms of fundraising and operations. So again, lawyers have long stressed the importance of compliance, but it really is important in terms of making sure you're staying up to date on filing these RRF1s with the AG on an annual basis. One final note on the form RF1, if you work with a CPA to help prepare your returns on an annual basis, there sometimes will be some confusion around who is submitting the form RF1. Now it's a little different with the option for electronically filing the RF1, but it is often the case that a CPA will submit the Form 990 and the 199 on behalf of a client electronically, but they may send a copy of the Form RF1 to the organization to print, sign, and submit itself. So if you're using an outside CPA, just really important to get clarity around exactly who's going to be responsible for submitting this RF1 to the AG's office and how it will be submitted. Make sure it's not falling through the cracks. Okay, our final regulatory agency, onto the next slide, that we're going to talk about for purposes of our conversation today. And I'm seeing a few notes come through. I know I'm talking quickly, trying to cover a lot of content in a short amount of time, but there will be a recording and these slides will be made available. So rest assured that you will be able to watch this as many times as you'd like. Fun Friday night viewing. So the last agency we're going to talk about is the California Secretary of State's office. So the Secretary of State's office is responsible for registering and monitoring entities here in the state of California. So a new nonprofit that's forming will file its articles of incorporation with the Secretary of State's office. And then organizations also need to file what's called the Statement of Information with the Secretary of State. It's a very simple form. It includes basic contact information for the organization, the names of its key officers, and the name and address for the agent for service of process for the organization. So this is somebody that legal papers could be served on behalf of the organization. Your first statement of information is due within 90 days of formation for a new California nonprofit. And then this form is due every other year after that. So this form is on a different filing timeline than the 3 other forms that we've been discussing so far. It's due by the end of the month in which the organization incorporated or in the 5 months before that. So if an organization incorporated on June 15th, 2020, then it's going to need to file its statement of information in each even numbered year between January 1st and the end of June, right? So you have a 6-month window ending on the last day of the month in which you incorporated, and it's due every other year. Now, because this form is due on a different timeline, it's probably the one that is most often missed by organizations because it's just not on that same schedule as the other forms we've been discussing. It's going to be really important to make sure you have some sort of internal process for flagging this filing and ensuring it doesn't get missed when it's due. You can also file a statement of information whenever the information on the form changes between deadlines, right? So for example, if the organization's address changes, you want to file a statement of information to update that right away. Or if your agent for service of process is updated to a new individual, you would file a new statement of information to report that. Or if your key officers, the 3 that are listed on the form, are changed between the 2-year filing period deadlines, you'll submit a new statement of information. It can be submitted online and is a very simple form. Again, it takes just a couple of minutes to fill out. On the next slide. So as I mentioned, this is often the most missed form by organizations because of the different filing schedule. It's not usually prepared by your CPA because it usually doesn't require a lot of assistance in terms of filling it out. So making sure you're really on top of your statement of information filing obligations will be important. If you fail to file, there is a penalty of $50 that can be imposed. This penalty is collected by the Franchise Tax Board. So even though it's a penalty related to filing with the Secretary of State's office, the Franchise Tax Board collects the penalty. Not a huge amount, but if you miss paying that penalty, the organization can be suspended by the Secretary of State's office and the Franchise Tax Board, which has pretty significant implications with respect to operations in the state of California, as we talked about earlier. Now, if an organization is suspended with the Secretary of State's office, then it can't legally engage in activities in the state. It can't sell, transfer, or exchange real property. It can't sue or defend itself in court without a waiver, and you lose the right to protect your name, right? So some of the same implications I was mentioning earlier. Okay, so with that general overview of these agencies, I think it's going to be helpful for us to do a walkthrough of how you can kind of do a quick audit of your organization's status currently with these agencies. So I've put on this slide the websites that I'm going to be going to right now. Again, you'll get a copy of these slides, so you'll be able to access these. You don't need to be frantically typing them. But I am going to share my screen and we're going to do a quick walkthrough of how you might just do an audit of your organization's status with the 4 agencies we talked about today. We are going to use CalNonprofits as an example. Let's hope it's in current status with all of its various filing requirements. So I'm going to start with the IRS site here. So this is called TIOS, the Tax Exempt Organization Search Database, and it's a place where you can go in and search the IRS's current database of exempt organizations. I am searching all of the databases, but you can actually search just the auto revocation list, for example. You can search small organizations that have filed that 990N. And you can search for copies of determination letters. Pub 78 is 501c3 exempt organizations that are eligible to receive deductible charitable contributions. So that's the database you're looking for an organization to determine whether it's currently a 501c3. So I'm searching by EIN right now, but you can also drop this down and search by organization name. I will just note that the database is a little bit picky, right? And sometimes names show up a little bit differently in the TOS database with the IRS than the legal name that might be in the Secretary of State's database. If you search by organization name and can't find an organization, try by EIN and you might have better luck. So I have CalNonprofits EIN in here. I'm going to hit search. And it's going to generate records down here for organizations that have a hit. So like I was just mentioning, the names can show up differently. CalNonprofits legal name actually has nonprofits as one word. But if I had searched nonprofits as one word as a name in this IRS database, it wouldn't have gotten this hit for me. So another example of why searching by EIN might be preferable when you have that information. So if I click on this, it's going to take me into the database entry for this particular organization. When we scroll down, this Pub 78 box right here is what we're looking for to confirm that the organization is currently recognized as exempt by the IRS as a 501c3. You need it to be included on Pub 78, right? So on Publication 78 data list, yes, good news, CalNonprofits is a 501c3. This is whether the organization is classified as a private foundation or a public charity. So PC there stands for public charity. And there's some other information that might be included. If you click on that question mark, it gives you a cheat sheet for what the various codes mean for a particular organization there. And then if you scroll down, I mentioned that the Forms 990 that are filed with the IRS are publicly available information. Where, the IRS is a bit behind in uploading, but if you drop down on one of these, there will be a link to download PDFs of 990s that have been submitted to the IRS for certain years, right? So this blue hyperlink right here would result in downloading a copy of the 2022 990 for CalNonprofits. And you'll scroll down and see that there's links to a number of recent returns that are available for organizations. So this is going to be the process for checking an organization's status with the IRS. In terms of the Franchise Tax Board, there is a website you can go to that will generate a self-serve entity status letter. It's this entity search database. You can search by ID number or name. Again, a fairly picky site, so you do need to get the name exactly right if you were going, excuse me, to search by name in this site. So I have CalNonprofits name entered in there. I'm going to hit perform search. Oh, and it's going to tell me I did it too long ago. So I'm going to go back here. And when I hit perform search, it will generate entity results, right? So usually there's only one that pops up here if you've gotten it exactly right. You can click on the entity ID number over here to get into the record. And it's going to show you those two different statuses with the Franchise Tax Board that I mentioned earlier, right? The first is entity status. Is the organization active with the Franchise Tax Board, meaning it's in good standing, it's paid any fines that are due, it's filed its returns? And then is it recognized as exempt with the Franchise Tax Board from state franchise taxes? So those two different statuses will be listed here. If you click on this generate letter button right here, it will pop up a letter as of today's date that lists the name of the organization, whether it's in good standing with the Franchise Tax Board, and whether it is currently recognized as exempt from state franchise taxes. So helpful to know that you can just on your own, without requesting anything from the Franchise Tax Board, generate a letter confirming your exempt status from state franchise taxes and your good standing with the Franchise Tax Board at any time by going to this website. Now, the California Secretary of State's database is available here. You can do a business search for an entity. Let's see if I've timed out on this one or if it's going to generate. So I've typed in the name there. You can do an advanced search if you need to change kind of the terms that you're searching for down here. But once you have conducted the search, the organizations will appear at the bottom. This is Cal Association of Nonprofits here. If I click on the name of the organization, it will pop up this window on the right. There's a way you can request a certificate of good standing. It'll tell me when the entity initially incorporated over here on the right, tell me that it's in active status and it's standing with the Secretary of State's office and the Franchise Tax Board, tell me the type of entity it's formed as, and then helpfully here, it will give you the due date for your statement of information, right? So that's that one that's due every other year by the end of the month in which you incorporated. So having this information straight from the Secretary of State's website can be helpful just in terms of calendaring when your next statement of information is due. Also really helpful on this site, if you click on this View History button down here, it will pop up another window that will show recent filings that have been submitted by the organization. So this is going to be most recent statements of information, and that will show address, significant changes. And if you click on this download button, you can actually download a PDF of the most recently filed statement of information. But this site, this page will also show any changes to the articles of incorporation, right? So here we have the initial filing. So those were the initial articles of incorporation filed for CalNonprofits, and then an amendment to the articles that was filed in 1991. The Secretary of State's office is working backwards and uploading PDFs of old documents. So there may be some older documents that aren't yet uploaded. As you see here, this amendment from 1991 is available as a PDF for download. Right, so clicking through on this site can lead you to a decent amount of information in terms of filings with the Secretary of State's office. And then finally, the AG registry site, right? So this is the AG registry search tool. You can search by a number of different fields here, but I've done by name for the organization. And time out again. Okay. So when I search by organization, it's going to pop up the records for the entity. You'll see here that there's 3 entries that pop up for CalNonprofits. These are all CalNonprofits filings, but they've had some filings that have to do with running a raffle. So those will show up as separate filings, separate and apart from the core organizations page with the registry. So if I click on this one that says charity registration, this is going to lead me to the main page for CalNonprofits with the AG registry. So it's going to show me that the organization is in current status. Great, not delinquent. It also has some other identifying information on here, including EIN. If you ever need to look up an organization's EIN, you can often pull it from this AG registry site. And it tells you when the next RF1 is due. So CalNonprofits is on a calendar year, so its next return and next RF1 are going to be due by May 15th. But if you scroll down, this is where there's PDFs of a lot of available information for the organization, right? So it's founding documents. This is going to be the form CT1 and the attachments that were submitted along with it when it first formed. And then you can pull copies of the RF1 and the Form 990 that were filed in past years. So all of those links will pull up a PDF of the respective document. Now, if the AG has sent communications to the organization, either about delinquent status or missing filings or other matters, those will also show up in here, sometimes as miscellaneous document, right? So there's often a trove of information and documents in these AG sites. And if you scroll down, the final thing I want to show is that this annual renewal data portion will list each year and show whether your filing has been fully accepted, if it's missing, or if it's incomplete. So if you find that your status with the AG is not current, not active, you're going to want to scroll down to the bottom of this site, and you're going to want to see which years are flagged as incomplete or missing. Those are the years that you're going to have to correct the submissions for. For Cal Nonprofits, all of them have been accepted. You'll see this note here that there was one where there was a correction with a resubmission, but it's been corrected already. So with that, we are almost at the top of the hour. I will pause and see if there's any kind of wrap up or key questions or burning questions that have come through, Robert.
Thanks so much, Aaron. I wanted to flash your disclaimer screen and just acknowledge that we do have a fair bit of questions in the chat. We have covered a lot of ground today. Many of the questions that are asked in the chat have been answered in the presentation. So what I would encourage folks to do is to review the recording that we will be sending out to everyone, as well as the resources and slides included therein. We really want to thank Aaron for joining us today and sharing your expertise with our community. I know this can be a troublesome and tricky process for folks, so walking us through the very many and sometimes complicated steps is much appreciated and very helpful.
My pleasure. Great to be here with you all.
And then I want to thank everyone for attending. We did have a full house today, and I do want to remind everyone that you will be receiving a recording of the webinar that includes the PowerPoint slides and the resources referenced. We also encourage you to reach out to us if you have any questions. I also want to flag 2 upcoming events. On Wednesday, March 26th at 11 a.m., we have Beginning and Endings, Essential HR Tips for Nonprofits. And then on Wednesday, April 9th at 11 a.m., we have the 3rd rendition of our Nonprofits Resilience under Trump 2.0. And this will be concerning financial health checks, contingency planning in a volatile funding environment. So with that, thank you so much for joining us today. We appreciate your continued attendance, and we look forward to hosting you at future Cal Nonprofits events. Take care and have a wonderful afternoon.